I'll be transparent with you. I've been on this journey where, I've been with the team for quite some time since COVID, and I've been with a few other situations where, I pay for stock market investing courses and some passive income rug pulls, so to speak, that I've been in where you put 2,000, 5,000 in it, they rug pull it. I've been through a little journey with this passive income thing, trying to create, some income that you just messaged in the group this morning, that the income that you don't have to work for, right? So I'll give you a scenario, the regular working person. I want to say, Jenny, if I can ask you this, what would you say would be the best way to go? Um, we're working with prop firms, we're trading in our live accounts, we're working a job, and what would be, I don't want to say a day in the life. I really don't know how to ask the question. It's kind of basically like, what would Jenny do in that scenario with the regular common person in your group wanting to create this passive income journey? You have a video brought out a couple of weeks ago where you talked about, you guys start with this much and it's going to be hard, but you can work yourself up to 20,000. And that's when you can start asking yourself the question, do I want to work here? Or you have options, right? Where you can actually, say you want to work part time or you just don't want to work at all. This amount can get you there. Like, I guess my question is like, before we get off today, I want you to talk about that for somebody like me that's been trying to do the passive income thing for so long and finally seeing a little daylight with using copycat, using US 30, like, being in a group. My Sniper Pro is on a $10,000 demo account. Shout out to you for that, because that thing has grown substantially after working the kinks out. I've been utilizing it on a demo for a whole entire month come tomorrow, and it's just blown. It done already made me, I think, anywhere around like $2,000 within a month. So I say that I'm asking, like, what is your method? And obviously you got videos out there, but just for my psychological right now, like, you know, what is your kind of start to not to finish, but kind of how would you do this thing if you're saying, okay, I'm going to use Dragonfly for this, and I'm going to use Sniper Pro here, and I'm going to use Gold Copier here. You get, am I asking that properly, Jenny?
Well, no, you are. So first off, I
Okay,
love the question, and I have probably an endless amount of time just to talk about it because it's so
okay,
in depth. Um,
okay,
and I talked about a couple of things here recently, and I know I'm not the only one who can honestly say when I hit my first six figures, I didn't even know. Like I was so busy hustling, I didn't even know. So that's in multiple businesses, including trading. I didn't even know I had hit six figures, right? And the same thing with seven. Like I had hit seven figures in a couple of businesses and didn't even know. Like it's hard when you're in the thick of it to understand, wait a minute, I just made $400,000 last year doing this, or hey, I made, that was worth, quarter of a million, that was worth X dollars. It's very hard when you're in the middle of it to decide, plan, determine, et cetera, et cetera. So I think the biggest key, and I'm not the only quote successful person or quasi successful, however the world rates that nonsensory. It's imperative that you have some ideas mapped out prior to, number one. Number two, you're reviewing the economics of it, the actual fiscal parts of it every single month. Like just look at where your money is going, review your bank accounts, review your business expenses, review what you're doing. And I know that sounds like not the fun or sexy part of this, but it is the most important part because you won't recognize, like what posted the other day. He said my retirement account 4%. Sniper Pro, I don't even know how many percent, but it made a whole bunch of percent, right? In the same month period, right? You won't recognize the value of what you're building in, sector A of your life if you're not analyzing sector B of where the money's being sent and sector C of what you're doing with your copy, group or your US 30 account. You won't recognize that, wait a minute, when I get over the day to day and the drawdown and the drama, this is kind of awesome. I made 2 grand. Like, so that's number one, is you're not going to recognize it when it's happening. Number two, You need to have the plan in advance of and reviewing regularly if you want to actually see this to fruition. Otherwise, you end up making a lot of dumb decisions and mistakes in the middle of it, not recognizing you're breaking what's working. And that kind of really applies to the trading industry, but it applies to other businesses too. You won't recognize how successful that business is if you don't actually review the financials of it. So in terms of the roadmap, I think number one, and this has been, I think my focus here in 2025 is to get the heck over the fear of drawdown and risk. Like drawdown applies to trading, but risk applies to anything. Like if we go buy a McDonald's franchise, God forbid, there is so much risk involved. If we do Chick-fil-A, same thing. I know it's a great company and all, but there's so much. If I invest into a Restore, which is like a health and body spa place, the risk that I'm exposing myself to, even if I do it through the LLCs and the S corps and all the right channels, the cost up front is enormous. I have to keep off risk capital. I can't avoid the risk. So at some point, we all have to grow up and stop being so dang emotional about, oh, we're in drawdown. Oh, we're in risk. Duh. To do great things is risky in life. Welcome to the world. America has it. Spain has it. Every other country has it. So I think going into it with your eyes wide open, knowing you're going to experience negative months in business, whether that's in your McDonald's franchise or your trading account, and not being so emotional. Because again, what do people do when they buy crypto? When they buy Apple, they buy it here. Well, here, let's go to gold. I'm gonna go to gold and I'm gonna go to the daily time frame. It's gonna take a second. I'm gonna turn off all the indicators. Okay. They buy it here and it just happens to be the time of day. And then some bozo in our politic world says something and this happens. They bought here, they freaked out, and then their neighbor said, and then what did they do? They sold. They got out. You're only realizing the loss if you close the business. Okay. You are only realizing the loss if you close the trades, if you sell the instrument, if you, that's the only time you're going to realize that loss. Whether it's the copiers we're talking about, we know US 30 is automated, NQ is manual. The copycats are manual for the most part. The truth is, you're going to have periods like this, but stop looking at every day like we won one, we lost one. Oh my gosh, the sky is blue, the sky. It's too much. This is nerve-wracking and it's emotional. It's hard. Instead of looking at all of that like it has to be the end all, no one week is going to retire you. No one week is going to change your life forever. I mean, this isn't a lottery. It's hard. This is part of it. So in order to,
And let me add on to that with just quickly, if you buy up here, first of all, you're chasing, not a great idea, but let's say you do. You have to be prepared for a drawdown. If you can't handle this, you are undercapitalized.
oh, that's the where I'm taking all of this.
Because it's the same with opening a business. You can open a business and you won't make money right away. You have expenses right away, and those expenses are draining into your capital. If you don't have sufficient capital, you can't withstand a drawdown.
Which means what? You can't stay in business.
Right.
It said that really well. I love him. I love the way he thinks. If this was a business, yes, we bought the business, the boring business we see all over the internet. We bought it. You have expenses, 6 to 8 months of turnaround time, contracts, businesses, all the setup. This is a long process that you have to be able to afford to hold this. I wish people, my biggest takeaway in everything that I'm getting to, I wish people would recognize trading is no different. A lot of the systems and services we provide and will continue to grow, they work. It's not if they work, it's can you afford to keep them working? Even myself, I've had accounts where I've got the track record that says, yes, I can prove the 6 and 7 figures. I can also prove having lost publicly 6 figures. I've not lost 7 yet publicly, but 6 figures I have lost twice publicly. It sucks. It's hard because crypto got locked up, stuff happened, brokers down, and you just couldn't transfer the money or didn't have access to the capital of that size that quick. It's a whole process, but the systems work only if you're going to work it. If you've got a $10,000 account here and you're smart, you're keeping some off-risk capital, maybe available in USDC, that's returning you, what is it, 4.8%, I think. Don't quote me. Everything's changing all the time. But it's 4.8% invested into Coinbase. Pretty sure I'm saying that right. You keep some off-risk there. And remember, that's not off-risk not growing. That's off-risk still maintaining not a bad return. But if something happens, you've got something to put in there, right? That's number one. You need that if you're going to be running any kind of automation, including Sniper Pro, Dragonfly. Not as much with Dragonfly, but if you're going to be turning Dragonfly up, you definitely need it. The US 30, you need it. And to say that a system fails because you didn't properly plan is the same thing as buying a franchise without any extra capital, lying to the bank and saying you have all this money available, and then you don't. And then, of course, it fails. The bank only approved you because they assumed and they verified that you had funds to, operating expenses, right?
Sure, and it doesn't necessarily mean that the business failed. It's just that you failed as a business person.
That 100%. And I am a very successful failure. Okay. I am very successful at failing. My goal is to fail forward to the best of my ability, right? But this is all possible, which offers capital being again where I wanted to take that. And I think did a great job. So any of these systems, that needs to be part of your formula. Don't think, hey, I got 5,000 back on my taxes. I'm going to put all 5,000 into this and I'm going to make $2,000 a month. You can technically make, as you saw with Robert's results and other people's, you can technically make that 40, 50, 60% in a month. But A, you don't want to do all of it. You need to have some office capital. B brings us to diversification, right? US 30 is great. I like it because it's diversified from the Forex pairs, right? It's different. It's a little bit more stable. The fees are a little bit less. I'm flat more often. The reason why my investors that I'm partnering with for the hedge fund that we are launching is because you're flat more. The problem with Sniper Pro and or Dragonfly is you're not always flat. And some of these investors, they need a certain percentage of your capital to be always available. And that this is bigger people. These people, first off, don't check on you every day. But secondly, there are terms that you must meet. So if we need to have X percentage of the portfolio accessible, it means we need to be flat more often. So that's where the US 30 comes in, is I'm flat more often. It doesn't mean there's not periods where crap happens. Those are unavoidable. We do our best. They're going to happen. But I use US 30 as the money that I have flat more often that's also growing exponentially. And then Dragonfly as the money that I have constantly moving and rotating, if that makes sense in terms of, portfolio view. This way, this money is constantly moving and growing. This money, I am making bigger gains, but I'm flat more often. Okay. It's part of my ecosystem right here, my roadmap to wealth. So A, we've got offers capital, needs to be part of your plan. B, diversify. I honestly think having a little bit in all, even if, because only a foolish person is going to say, well, this one made me 10%, this one made me 5, and I'm going to move everything from the one that made me 5 and move it to the one that made me 10. Don't ever do that. That's not a good recipe. You want the diversification. Why do you think all of those the retirement funds have some instruments in there that are gaining 30% and some that are technically net losing 2% and they're just doing dividends, right? This whole retirement target date fund that a lot of people buy into, PS, don't ever buy those. They have the worst fees and they're a bad investment. But anyways, worst fees ever. The reason they have all those things in there is because they offset each other. If this one does do something crazy, this one is carrying the weight in dividends. This one's carrying the weight in this sector's growth. It's okay. It's part of a winning formula that this one has only 10%. This one has only 5. This one has drawdown more often, but has more stable results. Like that's part of your picture. So that diversification is huge. What else? What else? Last, but certainly not least, probably the most important part is know with where you're starting. You cannot possibly, with any sense of rationale, plan on making 5 to 10 grand a month passively if your starting point is 2 grand and 3 grand and 5 grand. Okay. That's like making 300% a month. It's a really good way to get your butt handed to you. It's a really good way to fail. It's a really good way to blame everything and everyone around you. Stop doing it. If your starting point is practically speaking, I'm going to put 3 grand in US 30, 3 grand in Sniper Pro. I'm going to put $300 into buying prop firms and I'm going to lock myself. But by the way, I'm not allowed to buy more if I fail those. I have to wait till next month. Okay. So if I fail those, and this is hard, especially for me, because when you got the money, it's very easy to use it. But put a lock on yourself to say, hey, I'm going to put $300, even if technically this is a net loss for 12 months, which, as you know, is for many of the most successful traders. Okay. The prop firms are a negative net loss for many months, years, and even decades. Okay. Hope you guys all caught that. The prop firm money you're spending is a negative net loss for some of the best traders in the world. Okay. For many months and years. So please, when you're thinking about the expenses you're putting there, please factor that in. Again, so you've got this account that's making you 10%, this account that's making you 5, that's US 30, that's Sniper Pro. You've got some manual trading on whatever. You've got this prop firm budget that you're going to say, hey, I know this is going to be my net negative for the next 18 months, but I also know it's going to be a big jump of, let's say, 20 accounts, $2,000 a piece. It's going to be my $40,000 bump every 6 months or something. If you're looking at this practically, the ecosystem is beautiful. It's sexy. It's amazing. But people look at it very impractically. They're thinking Sniper Pro didn't make me 20 grand. It's a scam. Okay. US 30 was in drawdown for 3 days. I can't take this. Okay. The 3 days is an under exaggeration. That did happen this week. The election was a mess. That was definitely 3 weeks worth of awfulness, but you guys get the idea. 90% of the time we're out so quick. Then they have the prop firms and they're over investing into these. You need to look at that as being a net negative for the most part for at least 6 months. Because for most people who are better traders than what you think, we're net negative for that time frame. So that needs to be part of it. To look at it practically, which means you need capital, which I think would probably be that final point. Obviously, you need to be putting some money into your Roth IRA because you can only put in so much per year. Same thing with the health savings plan. If you have the extra capital, that's easy money that you're getting tax diversion on. And then, of course, if you have more money, you need an SEP, but that's a and you can even do a self-employed 401k too, but I don't think that's as tax advantaged. So those are all the accounts. I probably should have wrote this out with letters or typed it on the screen. I'm sorry I didn't. We will at some point do this together. But then last but not least, you need some form to get some money. Some people on this call have their $49,000 income and they're again trying to make these huge gains when they don't have a lot to work with. So if that's the case, if you don't have that extra capital to maybe put a little bit more in or maybe buy that next prop, finding some ways to earn some money is not a bad idea. It's going to be the difference maker because I am not the only trader who will tell you this. Trading is exponentially easier when you're not worried about paying your rent, when you're not worried about, hey, are my monthly bills okay? Like, is my life pretty much okay? Because then trading is, I won, I lost. It's part of the game. It's part of the skill I'm learning. But when you're short on funds and you're trading and you watch $20, $100, $20, go up and down, it's psychologically damaging. I just think it's the unhealthiest place to be. So get right financially before you try to make this your mainstay, because it's not going to be until you have some other streams of income. And again, those other streams of income, I don't care if it's Uber, I don't care if it's a laundromat, I don't care which one you love the most. I support any business that is ethical. Go do it, man. Go do it. But that money helps you put money into these systems, right? And then where I'm at as that final stage personally is obviously real estate is part of my portfolio. I really am working on angel investing and kind of the concept of buying boring businesses. It's just a very complex situation. So buy some businesses. You can buy businesses from the retiring baby boomers. We don't have to be mean, the mean YouTubers, right? Calling them boomers, right? But you can buy businesses from elderly people who have successful track records for very, very easy approaches. You just need a small business loan, which means it's not on you, right? You can literally finance the 10% that the buyer has to go down in terms of equity shares for the seller. And now you've got this other revenue stream that's really self-managed. I mean, you need some good managers and project managers on staff. You need some great people to lean on. But then you have this little bubble that's making you a couple $100,000 a year, and this little bubble that's making you $100,000 a year, and this little bubble that's making you 100,000. And all of a sudden, you're realizing, wait a minute, this is without extra effort. Okay, I'm making 500,000. So that's how I create that system. If you can just picture that box, and we'll type it out one day here soon and kind of go a little bit more in depth with it. But the box isn't hard to do. It's the money it takes to do it, the time it takes to build it, okay, and the mental and emotional fortitude it takes to stay the course through this period. Because this period is going to happen with your props. I know some of the best traders in the world who just have a losing period. They just go on a losing streak. It does not make them a bad trader. In fact, they're probably still more profitable than most people you know. But this period just sucked. The same is going to happen with the boring businesses. The same happens with rental properties. I've had experiences where the rental property, like you think is all set, like you just put a bunch of money into it, and then it's like a $30,000 problem. I've built businesses where you have this huge problem. China has some new law and it changes your entire business model. It's part of it. Like it's 100% part of it. So be prepared for that. And I think that answers literally every part. So A, diversify. B, don't be undercapitalized. You need to offer us funding. I don't care what you're doing. C, you need to have another way of earning some funds because all of those little roadmaps require extra money. And if you don't have extra money, every one of those roadmaps are hard or nearly impossible, right? B, don't have unrealistic, well, whatever that letter is. E, not unrealistic goals, right? Don't sell at a loss, okay? To the best of your ability, don't always cut your losses. This is, for futures, we want to cut our losses short. We want to be in and out. And I think that's where the break is too. For futures, Alex and I just spent 10 minutes talking about that. Cutting our losses, right? We want to cut them short. For this model, we want to do everything within our power. If that's a small business loan, if that's getting a second job, but we want to do everything in our power to not cut our losses. Because if you took the guy from Malcolm in the Middle, the little boy who was the one in the middle, some of his best investments were a parking lot. Okay, to give you some of his best returning investments was a parking lot. If you're the one who constantly cuts losses and sells at all the wrong times for all the wrong reasons, what would have been his best performing asset even 10 years later in his life, he sold, okay, during a dumb period. And again, that whole review your economic state, review what these things are doing. Had he been a little bit more involved or smarter, and it's not his fault, we all learn. I've made my own fair share of 1,000 mistakes. He would have known revenue wise, even though the situations that he was facing revenue wise, that was the best performing asset he had. And he's not the only one. So there's tons of businesses like that, but we get scared. Life happens. Something, we get a threatened out. We, get a buy offer. We sell at the wrong time and we miss all of this potential. And we do it with our relationships, our marriages. I'm not talking toxic ones, but I think the same concept with businesses. You do everything in your power to keep it going. If it's within your human ability, no matter what, you keep it going. You need that offer as capital. You need to keep it afloat. And that's the whole recipe. I know it's not sexy, but that's the same recipe. It's the same recipe that any other successful person will have done. I mean, different stories to tell in between and traumas that they've had to go through and overcome. But what's his name? Nick, he's the #1 motivational speaker in the world. Nick Nervo something. But if you only knew how many things have happened in that guy's life, like got kicked out of banks, couldn't do processing, which remember, you run businesses, you can't have all of your money tied up. So they tied up all the funds for like 90 days. It bankrupts everything in your world. And if you quit then, you lose everything. So if he would have quit then, he would have lost out on the $100 million things that he ended up building right after that. But he figured out a way to sustain and stay the course, and ta-da, and that's what it takes.